Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Last week the Australian dollar took many challenges to that top side, and after a failed attempt around that 72.15 key area, the market has staged a significant downturn and now looks towards the key level, that of the support at 70.90. It is assessed that from the breakdown of the RSI that we still need a little bit more that is to the bear case, convincing view that is that a break of the zero would give us a move through 70.90 and reinstate the downside to 69 cents as a broader target. Overall though, from the break of the trend and the pullback of 70.90 and the re-challenge to that top side of 72.15 and failing, now as I say, I do anticipate that this level may actually break, because the dollar index, which measures the greenback strength against a basket of 6 major currencies, has staged a significant rally back up towards the top side of the range around 96.60-70, with a peak seen at 90. This has seen the euro stage a significant downturn on Friday, and from the tumble now looks back towards its target around 111.30-35 and reassess from there. With the RSI breaking down is supportive to this call. The dollar yen, well, the market after many attempts at 114 backed away, but then the challenge on Friday to the downside knee jerked, and as it ended posting a dragonfly doji, but not the strongest, due to the fact is we normally see these at the bottom of the range, not at the top, so it might be classed as a hanging man, and therefore could see further risk to the downside because the RSI is breaking down, and therefore I will be looking towards 112.65 as the target that I have been calling for the last few days. A little bit of a disappointment when it comes to the bullish case for sterling, after first of all the bullish divergence kick-started the market to the top side, and with the Bank of England hiking rates, the market has found a little bit of a cap here at 133.75. However, I do believe the market support is around 131.5, even though the bears are at present roaming the markets. And let's see if we can see like a bottom feeder, as in bullish rebound, and then look back towards that top side of 134 to 136 as a broader target. KJN still weak and still looking to its target of 87.20 and reassess from there. It is a bit of a key point to keep an eye because of this dragonfly doji came around that level, so demand may return and see a short-term rebound. Interesting price action for gold, with the rejection of that top side level of 1,815 has posted a gravestone doji, but not technically supported in this case. We may see another challenge to that top side, but be on your guard because this is a bearish signal, and that is that we could see a weakness back towards 1,757 if this level contains the bulls and failing to the top side challenge. And wrapping up with oil, well, that divergence that we saw has kicked in and putting a little bit of more pressure on oil, and I still feel we're looking down towards 66 to maybe 64 or lower, around that 61, 62 region. Nevertheless, the bears are back here, as you can see the RSI breaking down, so I do anticipate weakness to the start of this week. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new week.